Today we're going to do problem 6-5B, a multi-step income statement and balance sheet. The following selected accounts and their current balances appear in the ledger of Can-Per Company for the fiscal year ended June 30th, 2019. So here we have all of the information we're going to use for our problem. If we jump down to the instructions, prepare a multiple step income statement, prepare a statement of owner's equity, prepare a balance sheet assuming the current portion of the notes payable is $7,000. Okay. When I have giant lists of numbers like this, I like to break them down into sections. So we know that our income statement has our revenue and our expenses. So if we look over here on the right hand side, we have revenue of sales, cost of merchandise sold, and then it lists our expenses. So we know that our income statement is going to start right there between drawing and sales. So I'm going to put a little line there so I know that everything down after that line is income statement. I also know that my statement of owner's equity includes capital and drawing. So I'm going to put a line between note payable and capital. And then our balance sheet is going to be our assets and our liabilities. Okay. So we're going to move over here to our worksheet. And the first thing we're going to do at the very top of our worksheet is our company name, which is Can-Per Company. And then after that, we're going to put in our date. So for the year ended, June 30th, 2019. Centered as best you can. I'm not very good at the whole centering thing. So the first thing we're going to list on our income statement is our sales. And our sales is going to go all the way over in the right-hand column. And our sales were $8,925,000. So I'm going to come over here, and I use sales, so I'm going to check mark it to show that I used it. The next thing I'm going to list is cost of merchandise sold. And the amount is $5,620,000. So if we have our sales and our cost of merchandise sold, we're now going to subtract those two numbers. So we'll put a line underneath, a single line underneath. When we subtract them, we get $3,305,000. And that number gives us our gross profit. So that's our revenue. Next we're going to list our expenses. So we start with the word expenses and a colon. Now our expenses we're going to split up into two different sections for a merchandising business. We're going to split them up into a selling expenses and administrative expenses. Okay. So we're going to start with the word selling expenses indented. With a colon. And if we look at our sheet, we used our cost of merchandise sold, so we can check that one off. If we look at our selling expenses, we have sales salaries, advertising, depreciation of our store equipment, and miscellaneous selling expenses. The next one is office salaries, so we know that we're into our administrative expenses. So our expenses kind of cut off right here after miscellaneous selling. So the first one listed is sales salary expense. So we're going to take that one and the $850,000 and move it over here. We're going to indent from the word selling expenses. Now we're going to have to add up all these expenses, so we're going to put them in this first column so that we have space to add them before we take our final numbers over to our third column. Coming back over here, I'm going to mark that one off that I used it. Advertising expense for $420 is my next one. Mark that one off that I used it. Depreciation expense, store equipment. Excuse me. And that one was $33,000. And then the last one for this list is miscellaneous selling expense for $18,000. Now before I go any further, I need to total these up. So we're going to indent the word, words, total, selling expenses. We're going to put a single line underneath the 18. Add up those four numbers, and the answer we're going to put in the middle column. So we have $1,321,000. Now our next section is going to be administrative expenses. So we're going to line this word up right underneath the word selling expenses. With a colon. Our first administrative expense is the office salaries expense for $40,000. I'm sorry, $540,000. So we're going to indent that one. So office salaries expense for $540,000. And check that one off. We have rent expense for $48,000. And check that one off. Insurance expense for $24,000. Depreciation expense of office equipment for $10,000. Office supplies expense for $4,000. And miscellaneous administrative expense for $6,000. Now we still have one listed here, which is called interest expense, and that expense we're going to use at the end of our income statement. Interest expense does not fall under selling or administrative, so that's going to come at the end, and that one's going to go under other expenses. Okay, so since we're finished with all of our expenses, we're going to come back over here and we need to add up this list of administrative expenses. So from the 540 down to the 6,000, we add those up and we're going to put the number over on the right and we get $632,000. And we're going to label that one indented total administrative expenses. So we have our selling expenses and our administrative expenses. We're going to add those two numbers together. So we're going to put another line underneath that 632. Add them together and it's going to go all the way over here on the right. It is $1,953,000. And that tells us our total operating expenses. And the word total operating expenses is going to be listed under the same area as the word administrative expenses. So again, this is our total operating expenses. And that is $1,953,000. So we have our gross profit up here and our total operating expenses of $1,953,000. So we're going to put a single line underneath that one and we're going to subtract our expenses from our profit. And when we do that, we get $1,352,000. And that is going to be our income from operations. The next thing we're going to list is any other expenses we have, which we do have some. So we're going to list the word other expense with a colon, and this is where we're going to put our interest expense. Since we only have one number, we don't have any other expenses, that number is going to go all the way over on the right, and that one is $12,000. We're going to put a single line under there and subtract the $1,352 minus the 12. And we get $1,340,000, and that gives us our net income. Now, we're not going to double underline this because we don't know that we're right, okay? So the next step is to do our statement of owner's equity. So we're going to find our statement of owner's equity form here. Move some things around on my desk. And our statement of owner's equity starts with the same three-line heading. So we need our company name and our same date, so for the year ended. June 30th, 2019. Whoops. So we're going to start with our capital as of July 1st of 2018. So we're going to list our owner's name, which was Jerry Faber. Capital. And the date. And if we look at our paper, it tells us that the capital was $431,000. So we're going to list that one all the way over on the right. And check that off of our paper to say that we've used that one. We're then going to list our net income. For the year. That number is going to come from our income statement that we just created. And our net income at the end of our income statement was $1,340,000. Now we have some other numbers we need to work with here, so we're going to stick this one on the left. So we have our net income. Now we need to subtract how much money our owner has withdrawn from the business throughout the year. So our withdrawals. Your withdrawals are the same as the balance in your drawing account. And on our worksheet over here on the left, it tells us that our drawing account had $300,000 in it. So we're going to put $300,000 here. And check that off of our sheet to show that we've used it. Now this is our net income. This is how much the owner took out, so we need to subtract these two numbers. To show that we're going to subtract them, we can put this one in parentheses to show that it's a withdrawal, that it was removed from our company. And the answer is going to go on the right, and that's $1,040,000. This $1,040,000 tells us our increase in owner's equity. Had that number been a negative, it would have said a decrease in owner's equity. So now we're going to take our beginning capital and add our increase in owner's equity. So we're going to put a single line here, and we get $1,471,000. And that number tells us Jerry Faber Capital on June 30th, 2019. Whoops. Okay. So we started with $431,000. We had a net income of $1,340,000. We withdrew $300,000 for an increase of $1,040. Since we started with $431, we increased it by $1,040. We ended with $1,471. Now we are not going to double underline this one because we aren't sure that it's right yet. We have to do our balance sheet and see if everything balances. Okay, so here we have our balance sheet. Now, if we look at our paper, we see, oh, sorry, a little blurry, we see that we've checked off the entire right column. Oh, we didn't check that one, but we know we used it. And we've used capital. So now we're just focusing on the left column from cash down to note payable. Okay. So on to our balance sheet. First line, company name. Now our balance sheet gives us a snapshot in time. It's not for the entire year. It's what we happen to have on that date. Okay, so we're just going to stick in the date here of June 30th, 2019. Okay, so our balance sheet, this is a report form balance sheet, so it's going to go straight down instead of a left and a right setup. We're going to start with the word assets centered in the middle, just like we would on a left-right form. We're going to start by listing our current assets. So all the way over here on the left, we're going to put in the word current assets with a colon. we look at our paper, let's look at our list here and figure out where our current assets are and where our property, plant, and equipment are. Current assets are anything that can be changed into cash within a year. So obviously cash, accounts receivable, merchandise inventory, estimated returns on inventory, office supplies, and prepaid insurance. Our office equipment kind of has the word right in its title. That is property, plant, and equipment. So I'm going to draw a little line right here between prepaid insurance and office equipment. So from cash to prepaid insurance are my current assets. From office equipment down to accumulated depreciation are my property, plants, and equipment. Okay, so I'm going to put a line underneath that last accumulated depreciation. So these are my current assets. This is my property, plant, and equipment. And then all of these payables are my liabilities. Okay. So we're going to come over here and we're going to list our cash assets. I'm sorry, our current assets, and the first one is cash. Now we're going to need to add these together, but we're going to stick them in the middle column because we only have to add them once. We don't need a second column for this. Okay. Our cash was $92,000. I'm not going to keep moving back and forth. You know where I'm getting the numbers from. The next one is the accounts receivable. Which was $450,000. The next one is merchandise inventory. For $370,000. Estimated returns on inventory. $5,000. Office supplies. $10,000. And prepaid insurance. $12,000. Now these are all of our current assets, so now we're going to add them all together. So we're going to put a line underneath $12,000. So we're going to add all of these together from the $92,000 down to the $12,000 and put the number in the right-hand column. And our total comes out to be $939,000. And this tells us what our total current assets are. So we're going to indent these words a little bit. Total current assets. Okay. So now we're going to list our property, plant, and equipment. So we're going to write those words on here. Property, plant, and equipment. With a colon. We're going to start with office equipment because that's the first one on our list. Now, for this property, plant, and equipment, we have a little bit more math to do because we have to take into consideration our accumulated depreciation. Okay, so we're going to start our list of numbers on the left-hand column, which is why this column is here. So our office equipment is $220,000 less our accumulated depreciation. Oh my goodness, I can't write today. Let me try this again. This is why I always say do it in pencil. Okay, our accumulated depreciation was $58,000. So we're going to subtract these two numbers because it says less, so I'm going to stick a line underneath them. Subtract them, and I'm going to put the answer right here, right next to that $58,000. And the answer to this one was 162. Okay, the next one's going to be store equipment. And that one was 650,000. Okay, less accumulated depreciation. Which was 87,500. And I'm going to do the same thing. Put a line under here, subtract these two numbers, and put the answer right next to it. So I have $562,000. There we go, 562,500. So my property, plants, and equipment, I have 162 and 562, 500. So I'm going to add those two numbers together. And this one's going to go to the right, but down one line. So this one is 724,500. And this gives me my total property, plants, and equipment. So now I'm going to take my 939 of my current assets and add my property, plants, and equipment to them. I'll put a single line there. Add those two numbers together, I get 1,663,000. Okay. That tells me my total assets. So that is kind of like the left side if you were doing a left-right type of form. Okay. So now we're going to move on to our liabilities. So we're going to center the words liabilities. We don't ever skip any lines when we're doing these reports. Actually, for liability purposes, we don't want anybody to be able to add things to our reports. So we make sure that we're not skipping lines in between things. Okay. Now, this can get a little more difficult when it comes to our liabilities. If we look at our list of liabilities, okay, we used all of these accounts when we were doing them before, but if we look at our list of liabilities, we have accounts payable, customer refunds payable, and salaries payable. Those three are pretty self-explanatory, and they're all current assets. A current asset is something that can be paid off within a year. Okay. A note payable, however, is a current asset and a long-term, they're all liabilities. A note payable is a current liability and a long-term liability. Okay. If we looked at our instructions under the balance sheet, it said the current portion of the note payable is $7,000. So this part right here is a current liability. This $7,000 is a current liability. The rest of that note payable, the other $133,000, is a long-term liability. So we're going to split these up into two sections, current liabilities and long-term liabilities. So the first one we're going to list as current. With a colon. And then we're going to list our liabilities and their amounts. Now, this isn't like accumulated depreciation. We don't have those extra numbers to calculate, so we're going to stick these numbers right in that middle column. So, accounts payable was $38,500. Customer refunds payable was $10,000. salaries payable is $4,000. And then notes payable, and in parentheses we're going to put current portion. And our paper, our instructions told us that that was $7,000. So now we're going to take these four numbers and we're going to add them up. So we'll put our line under here, add them up and put the total on the right, 59,500. Okay. That tells us our total current liabilities. So we're going to indent that word, total current liabilities. Now we're going to list our long-term liabilities. So we're going to pop right back out to that left margin. Don't forget the colon. Our first long-term liability is going to say notes payable. In parentheses, we're going to write final payment 2032. Now we only have one long-term liability, so we're going to take that number and jut it right out to the right-hand side. And that was 133. Okay, so this 133,000, again, if we look at our list here, it says notes payable was $140,000. So we take 140,000 minus the 7,000 and we get the 133,000. Okay, and the 7,000 came from down here. Okay. So we have our current liabilities, we have our long-term liabilities. Now we're going to add these two together to get our total liabilities. So we put in our line, and our total liabilities is $192,500. And again, that gives us our total liabilities. The last section that we need to accomplish is our section labeled Owner's Equity. So again, we're going to center those words. Owner's Equity. So we're going to list our owner's name, Jerry Faber, capital. And the number for our owner's equity is going to come from our income statement, our statement of owner's equity that we created before. So we're going to use this $1,471,000. And that's the only number we're using. We're not calculating anything, so that one's coming. So we're going to put that number all the way over on the right. $1,471,000. So now we're going to take our liabilities of $192,500 and add them to our $1,471,000. So I need a single line here. When I add those two numbers together, I get $1,663,500. Now hopefully this number is the same as this number. Oh, when I wrote that one in, I wrote that one in wrong. Okay, I missed that 500 when I added those together. So now that our numbers are equal, we can double underline them. We also need to label our numbers here that we didn't label. So this last line is going to say total liabilities and owner's equity. Okay. Now that we know that these numbers are equal, we know that everything balances, we can go back to our statement of owner's equity and double underline this one. And we can go back to our income statement and double underline this one since we know that they are correct. And that completes problem 6-5.